GM on-chain trenchers, 𝗬𝗵𝘁 here with another on-chain trenches plus market insights video report going over week 50 and taking a look at everything that happened in the markets, taking a look at macro. And in the second half of this video, as always, we will take a look at our portfolio holdings and how they fared in this market environment. All right, without further ado, let's directly jump in. So as you see here, we are back at extreme fear levels. This is not concerning, but it's a bit weird, right? We've been down here for a very long time. Shortly, we bounced back up above the extreme fear threshold of 25 over the last 2 weeks. And now, just at the start of this week, we bounced back below into extreme fear levels. And if you look back here, there were 2 periods where we have been trading at these low levels. And as I said earlier this morning, right now, everybody is just super tired and annoyed by this market. It feels like everybody wants this super choppy and down only year to finally be over. They are doing some tax harvest cut losses, or however you call that, just selling their positions that are deeply in the reds to save on taxes. And I think that's currently going on so that they can then finally reset their P&Ls heading into the new year. And the sentiment in the stock market is slightly more positive still there. We are in the fear levels despite stocks being close to all-time highs. All right, let's take a look at Bitcoin dominance. As we've broken out of this year-long upwards channel, like we all thought we were going into a full-blown altcoin season, but of course we all know this didn't happen. Then here we formed a new upwards channel almost in parallel to the old one. We broke back down again, and now for almost the entirety of December, the last 2 weeks, we're just trading sideways. Whenever there is a little bit more fear, Bitcoin dominance spikes, and then if we see some kind of relief rally, Bitcoin dominance drops. But overall, it's a zero-sum game, and we're trading around the threshold of 59%. A similar picture here in the total 3 market cap, which is like all altcoins excluding Bitcoin and Ethereum. We still haven't cracked through the old all-time highs of 2021. Earlier this year, it seemed that we might break out, but then we just came crashing back down, also breaking this new upward trend channel here. But for now, it's important that we hold this level here. I don't think we will drop below 750 billion. And I think we will just bounce a little longer in this broad range here. And then hopefully in Q1 2026, we can break through this upper ceiling and go to new all-time highs. But I mean, I'm not a chart expert, and we have Mike in our Discord, which was just recently crowned the macro guru. So if you want any advice on that, please reach out to Mike. Cool. Here, it becomes more interesting. If we look at the altcoin season index, despite all the choppiness and the massive frustration that we are seeing in the markets and all the capitulation on crypto Twitter, we are still we're not, to my surprise, in a Bitcoin season, which we always did or had during choppy or just super painful periods. And this is a very strong sign to me, because it means that finally we see some sort of decoupling between Bitcoin and strong altcoins that have product market fit, that generate real revenue and have at least a small cohort of monthly active users. Because if we want crypto to exceed, then eventually we have to break free from the Bitcoin dominance, because Bitcoin is just this old ossified digital gold. It is perfect the way it is, but it won't lift crypto to new heights, and it won't bring new innovations to the table. So seeing that we are not in a full-blown Bitcoin season, despite all the despair in the market, gives me hope. Here, a quick look at the funding rates. So we see a lot of blue or dark blue here, which stands for negative funding rates. But more recently here, the picture has become a little bit more green, but still funding rates are super, super low. Interestingly, that Bitcoin has lower funding rates than ETH and Solana. And here, allegedly good altcoins like Hype and Zcash have slightly higher funding rates, and everything else here has low single-digit funding rates. Yeah, it's a little bit better than in the past. Just a few days ago, if you see here during breakpoint, I mean, Solana had negative funding rates. That means that, yeah, people bet that Solana was going down, and if you took on a long position on Solana, you got paid for doing so, which is just bonkers. But yeah, this is the current moment in crypto. And here, let's take a look at the App Store. And yeah, there is no single sign of retail coming back or being active. I mean, we have 𝗂𝗁𝗂𝗏, a somewhat crypto application, like the prediction market being ranked #1. But that's not what crypto natives want to see, because on 𝗂𝗁𝗂𝗏 are just trading prediction markets and not buying crypto coins, aka our bags. And yeah, here Robinhood, that's the application where retail buys crypto, or Coinbase. We are at rank 20, and Coinbase even dropped out of the top 30. Moonshots and Phantom, they are like at rank 380, and Phantom dropped out of the 500. But this here is overall apps, and this here is just finance apps. So yeah, retail is not around as of now. ETF flows, we had some very choppy weeks and months with major outflows in November. And yeah, last week we had 3 positive days, 2 negative days, but overall we had a positive week. 280 million of Bitcoin inflows, 209 million of ETH inflows, and yeah, some modest Solana inflows. But what's interesting about Solana, it had positive inflows every single day, but of course it's just a drop in the bucket compared to ETH and Bitcoin. And especially, yeah, ETH, we have to highlight it here, since it has, I don't know, 1/5 of Bitcoin's market cap. So those inflows are more significant than the Bitcoin inflows when it comes to pushing up the price. Cool, let's take a look at the DATs next. And yeah, I suppose why Bitcoin has more inflows, that's the very effect here. We have Bitmain here still trading at a positive MNAV at 0.2. So yeah, Tom Lee can still issue shares and buy back, like issue debt to buy more Ethereum, while MicroStrategy and Michael Saylor can no longer do that, since they are trading at a NAV below 1, currently at 0.81, which is not good if you're a Bitcoin maxi. This means, yeah, Saylor just can no longer sell shares to buy Bitcoin. And here, yeah, we see that, I mean, Solana, they haven't been buying since September, just a flat line. Ethereum, every single week, there are continuous buys coming from the DATs, most of them from Tom Lee. And the same story, like a similar story to Solana, we can witness here at the Bitcoin chart. It's just flat. And last week we saw this short uptick where Saylor, to our surprise, was able to raise almost 1 billion to buy more Bitcoin. Cool, now let's take a look at some DeFi metrics. Here, TVL, of course, it has been crashing after the October 10th crash, as a lot of people got liquidated. But now we might have seen a bottom 2 weeks ago, and we are now grinding higher. We're up 2.76% week over week, and yeah, added 3.3 billion in DeFi TVL. DEX volumes, again, down since October 10th. But now, again, we might have seen a bottom, and now we're just trading sideways, a little bit ups and downs. This week, we are down slightly, 4.8%, but still 72 billion traded. If you just zoom out a little bit, I mean, the growth looks, I mean, there is long-term growth as long as we can maintain these levels and probably grow a little bit from here. Everything should be fine. Perps volumes look even better. I mean, just look here, the trend just goes up only. And also from October 10th, we didn't see that sharp of a drop. But yeah, surprisingly, week over week, we saw an almost 15% drop in perps volume, while DEX volumes only dropped by 5%. But yeah, this chart still looks pretty healthy in my opinion. And here, probably the most important chart, stablecoin inflows, and yeah, or just stablecoin market cap. And as long as this chart goes up to the right, I think, yeah, we shouldn't be too concerned, since new liquidity is entering the crypto space. And yeah, after it seemed that we peaked a few weeks ago, here was this little trough, and now we're going higher and closing to new all-time highs. We are up 0.5% or 1.5 billion week over week. Cool. Now let's take a look at the OCT Plus portfolio, or my personal portfolio. So yeah, just a quick recap. So here we have the core positions, which should be around 75% of our portfolio. And then we have the satellite positions, which should be bigger than 20% of your portfolio, and then some stablecoin allocations. Here in the core bucket, yeah, those are basically store of value assets like Bitcoin or Zcash. Choose your poison, as you know, guys. I prefer Zcash over Bitcoin. I just think, yeah, it's a better product. It has a higher value proposition to me as an investor. And yeah, in the long term, I think that Zcash should definitely outperform Bitcoin, as yeah, it comes with the same properties as Bitcoin, but it is private. It gives me privacy on top, faster transactions, and yeah, that's why I prefer Zcash over Bitcoin. But yeah, it definitely comes with more risk. So if you prefer a slightly less risky and less volatile portfolio, then just replace Zcash with Bitcoin. And then here we have major layer ones and high revenue generating applications. And here are just some satellite positions. In my case, it's 𝗬𝗬𝗃𝗃 and some stables. And yeah, I made one change to my portfolio. I dropped 𝗬𝗃𝗃𝗃 out and replaced it with 𝗬𝗏𝗃. It's still a super small position. 𝗬𝗏𝗃 is a ownership coin launched on MetaDAO. More on that in a minute. But yeah, it just dropped by over 50% after the initial hype. So I thought it might be a good moment to build up a positioning. And generally, I want to have more exposure to ownership coin rather than just some governance coins with lots of unlocks and just ownership uncertainty. Cool, let's jump in. So first off, Zcash. Here we see the shielded pool. It didn't budge an inch. So despite the correction that we went through from $730, $50 all the way down to $320, I guess. Now we're trading somewhere around 400. Long-term holders, I mean, they are just chilling, shielding their Zcash. So the shielded pool, didn't move at all. It's up 0.2% week over week, so 8K more Zcash were shielded, and almost 30% of the entire supply is shielded. That's just like, think of this big black hole that sucks in all the Zcash. That's like where the long-term holders deposit their Zcash, and this supply is just taken out of the market. Then we had A16Z, arguably the largest crypto VC out there, dropping their report for 2026, where they shared their most exciting ideas, and their number one was privacy will be the most important mode in crypto. So that's very reassuring to hear from one of the biggest VCs out there. And then Barry Silbert, he commented, and because privacy is essential for most real-world use cases, a handful of privacy chains could own most of crypto. And as Zcash is the leading privacy chain, I think Zcash just has this big moat because it has been around for such a long time. There is this massive supply sync with the shielded protocol, with the shielded pool, and it just has inherently, or like privacy is embedded in the layer one. And now with the Tachyon team and all the others trying to scale private transactions, I think that Zcash is very well positioned here. And then to my surprise, I also posted about it. It was not on my bingo card that 𝗬𝗪 is gonna shill Zcash publicly. It's already the second time, and this weekend I was listening to the All-In pod, and here 𝗪 just clipped this exact scene. But what 𝗬𝗪 said is that we all should embrace privacy a little more, because now that we live in the age of the internet, everything we do there can be traced. And unlike cash, you go to a supermarket, you pay your friends, nobody can track that, but we should demand, or at least desire such features for digital payments. So he just mentioned the word shielding, privacy, private money. I mean, he didn't mention Zcash, the word, but I think he's still in the accumulation phase. So sooner or later he will also use the word Zcash, but just him on one of the biggest podcasts out there, mentioning by private payments and shielding your money. I mean, if you can connect the dots, then you should know what he is talking about. And then Sasha publicly committed on to writing the Zcash standard. I think you guys all know the Bitcoin standard, one of the most famous books that really helped with the diffusion of Bitcoin. And now he said he's gonna write this book in 2026, and I guess he will release every single chapter via online blog posts, and then in the end he will print the book and release it to the public. And yeah, cool. Let's take a look at Solana, our layer 1 blade. Here, spot volume just, I mean, this chart, I'm not sure if it looks better or worse than the overall DEX volume, but yeah, it's pretty stable. I mean, we had this spike here during the Trump meme coin launch, but since then it's just pretty solid. But here, the most important metric, app revenue by chain, Solana is leading all the other chains out there in 24 hours, as well as on the last 30 days. And I found this tweet here earlier today on X, and here like people were arguing that Solana is undisputably the #1 layer 1 blockchain, and yeah, here it compares it to other layer 1. So monthly active users, like way ahead of everybody else. Application fees, so all the applications that are building on top of Solana and how much they're making. So over the last year, they earned $5 billion, which is just 3-4x more than on all the other chains, not combined, but yeah. I mean, on Ethereum, chains do make some revenue, but on Base, BNB, that's all negligible. Chain fees as well, Solana #1, but also if you look at chain revenue, Solana makes almost 3x more revenue than Tron, Ethereum, or all the other chains. But yeah, if you look at some retail metrics, chain transactions, here we have 34 billion, I mean, 10x more than the second place. And also here, the DEX volumes are, far bigger on Solana than anywhere else. And here, we see inflows over the last year into Solana, 6.7 million of inflows, and more than 4.5 billion of inflows came directly from Ethereum. So Solana is slowly sucking up all the liquidity. I mean, I was a long-time Cosmonaut and diehard, Cosmos believer, but I guess Solana sucked up all of my liquidity. I just sold, all of my Cosmos tokens and moved over to Solana because it's a funnier place to be, better UX, faster transactions, more DeFi applications. But I think, all these people that moved over to Solana have had very similar reasons. Then here, transaction activity, again, super stable. We don't see any decline or drop here. And stablecoins on Solana are growing. We are close to breaking new all-time highs, which is, cool to see. And here, again, stablecoins broken down into the various stablecoins. USDC is leading, and also stablecoin transfers are rising. Cool. Let's take a look at Hyperliquid. Here, also as perps volumes in general, it came down a little bit, down 10%. Week over week, I mean, perps volumes, they still look kind of solid. If we just go back to May, we are now at higher levels than in May. Just the DEX volumes are a little bit concerning, to be honest. This chart doesn't look so good because now, Solana is massively competing with Hyperliquid, especially on the DEX or spot side. So we've seen with the launch of Monad, but you can also now trade Zcash and other non-Solana native coins on Solana spot, especially enabled by these proprietary AMMs. But what's good to see, I mean, Hyperliquid is the #1 perps exchange, and we see TVL is growing up 2% week over week, and open interest is up 17%, which is super cool to see. And the revenue is down a little bit, but still they're making 15 million of weekly revenue. And here's the overall open interest chart. We see the massive drop after October 10th, and now we're slowly grinding higher. And Hyperliquid still remains king with almost 50% market share, based on open interest, because volume is pretty easy to fake. So you really have to look at open interest if you want to understand who is the leading SEX. PumpFun. We are back at almost all-time highs in volumes here. I mean, take this chart with a grain of salt, because I also looked at the Blockworks data, and they report slightly different data. So I'm not sure if this reporting here is right, but I've seen an uptick in PumpFun trading volume, especially coins on PumpFun. They're slightly hot again. And DEX volume here, it was up 100% week over week last week, and then this week another 57% increase. But revenue is down 7.4% week over week. So how is this possible if volume goes up, how can revenue be down? And therefore, we have to take a look at this chart here. And yeah, that's the two ways that PumpFun makes revenue. It's here in the red, that's the Pump Swap, that's their own DEX. So the moment that tokens graduate on PumpFun, they migrate to their own native DEX, which is Pump Swap. And there, of course, they only take a small swap fee, I guess 0.3% on every single swap. And here, PumpFun, that's their launchpad. And that's where all the revenue is generated, because every moment like a coin graduates, I guess PumpFun makes more than 10K, 20K, something like that. And that's really their leverage. And we see here that the secondary volume of PumpFun token has spiked, but this does not really lead to an increase of revenue, because for revenue to increase, we have to see here these blue bars to spike, and that's not the case right now. So back in, during the Trump meme coin craze, we just had a lot of PumpFun tokens graduating every day. So that's where they made a lot of revenue. And yeah, but it's good. Like now they introduced their own AMM swap. And yeah, that's just like spot trading is accelerating while fewer tokens graduate as of now. But yeah, where does this volume spike come from? And I took a screenshot before I recorded. And here you see the top 24 volume coins on Solana. And here we have 5 PumpFun coins in the top 15, like Fartcoin, massive 24-hour volume, Jelly, Pippin, Eon, and Hero. So like I've observed those 3 coins, but I guess those are 2 newer coins, never heard of them before. But yeah, all of them had a higher 24-hour trading volume than PumpFun itself. And yeah, that's why I think the data here is correct. We just see, some activity back in the trenches. It's not that people are sniping new launches, but now finally there's some hope and people are holding on to their memes and they can finally run again. And yeah, probably now people are holding a little longer than 10 seconds. And yeah, here we have the PumpFun revenue. As you see, the AMM fees, that's the upper green bar, that's just a small fraction of the overall revenue. And the bonding curve, that's like when the coins graduate from the launchpad, that's where they make all the money. And yeah, that's just been stable. Like despite volume spiking, revenues didn't increase that dramatically because for this we need more tokens to graduate from PumpFun. And yeah, the protocol is still making lots of revenue. They're currently buying back more than 6 million every week. So daily revenues are still close to 1 million, which is not bad at all. And yeah, here, that's the graduated tokens. I mean, here we see a slight uptick, 1,000 tokens graduated last week. That's up 17%. And here, if we zoom in the daily candlesticks, we see that, since the start of October, more tokens are graduating every day, like somewhere between 100 and 150 tokens. And traders on PumpFun have remained pretty solid, somewhere between 200 and 300K a day. And yeah, just invest in app layers. Here, a cool chart that I wanted to share with you. Feel free to pause if you want to study it closer, but it just says that applications are eating into the layer 1 premium, and all the layer 1s like Solana, AVAX, so on and so forth are super highly valued if you compare it to the fees or the revenue that they are generating compared to the entire market cap. And high earning applications like Hyperliquid and PumpFun are dirt cheap compared to layer 1s, and they're just generating much more revenue. Look here. These multiples compared to these multiples, especially PumpFun, like market cap to revenue 4.5x. And yeah, all the layer 1s are somewhere 50, 100 or 1000x, which is just insane. And our final major holding in the satellite position, MetaDAO. They are still producing solid revenues, 1,112K last week. We're down slightly, but Profit just said that those numbers are misleading. They are at least earning 2x these numbers here, since they increased the taker fee from 0.25 to 0.5, and that's not displayed in this chart here. And here 0.5 taker fees. And still, there haven't been new token launches on MetaDAO since they're currently updating their protocol and waiting for audits to come back. And then Ranger and Drift both announced at Breakpoint that they are migrating, or like they're launching on PumpFun, and Drift is migrating their coin to a ownership-based coin on MetaDAO. And Prophet said that like his inbounds are currently going crazy. There are more than 400 teams interested in launching on MetaDAO. He said 25 of them are super promising, and yeah, roughly 10 of these products are super high quality, which would easily get VC funding out there, but they all chose or are considering to launch on MetaDAO. And the more coins that launch via MetaDAO, the more revenues the MetaCoin will generate. Cool. And yeah, here, final slide. I mean, look at the Meta chart. For over 2 months now, it's trading sideways. And yeah, I mean, if you've been around over the last 2 months, you know that everything else is down. So this is a very strong sign to me and makes me confident as a Meta holder that eventually we will break out here from this sideways chop. And yeah, there are a lot of catalysts on the horizon with upcoming ownership coin launches. While yeah, some ownership coins, they had like a good time in the past, but now they came down to reality, especially 𝗬𝗫. But I wanted to highlight here Solo, my biggest ownership coin holding after Meta. Now they're almost back down to the ICO price, which was at 80 cents. And as I've outlined before, like why are ownership coins undervalued right now? You can buy Meta Solo basically for their treasury value. They have a little less than 8 million sitting in their treasury. So if you buy this coin now, then you're basically buying into this treasury, which does not consider the protocol and like all the tech that the team has built over the last 1.5 years. So, I mean, the downside is probably 20% from here, because the moment it drops to 70, 65 cents, we can simply liquidate the treasury. Like you buy the coin for, let's say 60 cents, but the treasury is worth 80 cents, then you can capture that arbitrage by liquidating the treasury and paying it out to token holders. So that's the downside. In the worst case, you liquidate and you capture that arbitrage. And the upside is, I mean, they are building a new stablecoin, Solana native, which pays yield to folks that are using that stablecoin in DeFi. So if your stablecoin sits in liquidity pools, it earns passive yield via treasuries and other mechanisms. So yeah, I think that's a very asymmetric opportunity here. And yeah, 𝗬𝗫, the #1 ownership coin, I mean, it had just this meteoric rise to almost $8, and now it corrected over 60%. So I bought my first position somewhere around $3.70. And yeah, now I'm most likely buying a little bit more, but I think, yeah, this is the leading ownership coin. They have a very strong community, almost 30K holders. So yeah, this could also be a cool buying opportunity. I mean, don't put that's a small position in the satellite portfolio. Meta, if you're convinced of ownership coin, I think is the no-brainer investment. And if you want to go out a little bit more on the risk curve, consider adding Solo or 𝗬𝗫 to your portfolio. But yeah, I think that Solomon is the better play here compared to 𝗬𝗫, since it's trading super close to the treasury, while 𝗬𝗫 is much higher and their treasury is somewhere between 3 to 4 million. Well, and Prophet, like the guy over here, he finally doxed himself at Breakpoint. Like it was this notorious guy that nobody really knew who he was, just that he was a super correct dev. And yeah, his explanation was that now it's time to improve the trust, as yeah, the protocol is growing and they're getting more attention. And when I'm asking you to do something as risky as bet your startup on this new paradigm, I think it's important that people know that who he is, and yeah, humans trust faces more than PFP. So I think that's a super chat move from Prophet. And I think, look at this guy. That's exactly how my founder, right, should look like: smart, intelligent, kind, down to earth, and humble. Cool. That's it for this week's OCT Market Insights. If you have any questions, please let me know in the Discord. And yeah, see you around there. 𝗍𝗵𝘁 out.